Milk prices were devastated by the drop in demand due to COVID-19, to the point that some farmers had to dump milk. However, nearby milk futures have rallied from $7 to almost $10 per hundredweight from the April 22nd lows. I asked market analyst Brian Doherty about the rebound.
Not only did milk form a V bottom, it skyrocketed right out of that V as I think the timing of a lot of things are coming together. When you look at what's happened in the reopening of not only the US, but China and elsewhere, it's created this vacuum of really strong demand. We saw really good numbers on the April for the export market, but also domestically, just this rapid replenishment or need to replenish the pipeline and get inventory into the pipeline. Coincide that with what we see 6 weeks ago, farmers dumping milk and cutting back on herd size.
So the cheese market is a big driver of that, though, isn't it?
It is for sure. Cheese prices have really skyrocketed to all-time new highs, trading in today in the $24, $25 area, blocks and barrels. And traditionally that means milk prices take it times 10. So milk, in theory, might be in the $24, $25 area. Futures in June are around a little over 20, approaching maybe 21. But that just tells us there could be a lot of volatility.
Do you see these higher prices continuing to be supported here as the economy opens and that demand gets a little bit even more back to normal?
It looks like there's good support under the market and maybe some room for those back months to move up. But if I'm a dairy producer, I'm not betting on $20 milk in the fourth quarter or first quarter. I just think that there is too much out there from a feed perspective. You get cheap feed. That's a big ingredient to milk prices. So right now is the time to be having really good conversations with your cheese plant, your co-op, who's ever buying, and see what tools they offer, or your advisor, and shore up some good prices.